The way we look at it is the fact that in our engagement process, we've always tried as much as possible, right, to position some of the things that we see in terms of the, let's say, the potentials that we are seeing in Africa and also particularly in Nigeria. And the way we look at it, on one side, we look at it on the basis of, let's say, the impressive growth rate that we've seen in Africa and also in Nigeria at the beginning of this program. We heard about, let's say, the growth rate that we've seen, in Africa. Let's say in 2012, we're talking about something close to about 4.8% for Africa. 2013, IMF is estimating that we will have about let's say about 5.1. By 2014, we are talking about something close to 6%. So in Africa, right, the growth rate is impressive, and we see that, and we are also trying to key into that. So every time we have engagement with institutional investors from outside the country, outside Africa, we let them know what we are seeing. And you can compare that and contrast that with what you see maybe in terms of US economy, in terms of what you see, let's say, in Eurozone, that is even predicted to contract. So that's number one. Number two, we also look at what we call the benefits, from increased, foreign direct investment in Africa. Let's say in the last 2 to 3 years, right, we've been seeing increased volume of foreign direct investment, and whereby for Africa, it's moved, in 2012 by about 5%. Is only one of the 2 regions in the world, that actually experienced an increase in FDI, and that's impressive. And to the extent that we are seeing that, right, we are also, as asset managers, we are also trying to key into that in terms of trying to invest in Africa and also in Nigeria. Then thirdly, we are looking at, let's say, the demographic dividends and rising urbanization. And what do I mean by the demographic dividends? 70% of Africans are below the age of 35, right? And when you look at that, the middle class is also rising. And we've seen a middle class that is as huge as, let's say, that you can compare, let's say, to the population of Brazil or that of Russia. So when we see that, we say that, look, these are opportunities that we need to tap into. And it's being predicted that, let's say, by 2015, about 220 million Africans who are just barely able to, let's say, afford basic needs. By 2015, they will become consumers, right? In terms of urbanization, cities with more than 1 million population, we've got almost close to about 52 cities in Africa now with population of more than 1 million, right? That is very close to what you've got in Europe, right? It's more than what you've got in North America. So when you look at, in terms of urbanization, what are the things that will flow from there? Whether it's housing needs, whether it's consumer goods, we are positioning and we are trying to tap into that. And we are also telling, global institutional investors that these are opportunities that we need to jointly, explore. Political environment is becoming more stable. Our Ghanaian counterparts have already told us what happened, in Ghana. More African countries are becoming, democratic in terms of what they do. And the other thing is the fact that I have my regulator here, the regulatory environment is becoming more and more bankable. Bankable to the extent that you can predict, bankable to the extent that you can put, you can put a lens on, how the regulators, will fashion out, regulatory environment that will be conducive to investment. And we've been seeing supportive government initiatives, and they are coming, every point in time. Another thing is the fact that we have attractive returns, right? And in Nigeria, last year, the all-share index, that captures the Nigeria Stock Exchange, we are talking about something in excess of 30%. This year alone, year to date, we've done something close to about 28%. And we are talking about dollar terms. So when we see that, look, we want to partner those who are trying to come in to take advantage of this. And we also look at what you call the increased domestic savings. And for us, it's very, very key, right? Chinelo had mentioned the fact that, before the Pension Reform Act in Nigeria was put in place, we were talking about pension liabilities or about 2-point-something trillion naira, right? But now it's moved from negative of 2, we are talking about 3.6 trillion naira. So we've moved from negative to about 22 billion US dollars. That's a massive domestic, kind of savings when you look at it from the point of view of Nigeria. So when we meet investors, when we meet global investors, we are saying, look, we've got this amount of money, right, that we want to invest. So you tell us some of the things you are looking at. We will tell you some of the things we are looking at, and we'll put our money where our mouth is. Because when we see those opportunities, we are not only just telling you, we are also trying to explore those opportunities. And where are the opportunities? I mean, somebody was asking me earlier today, and we are saying that on one side, we've got, in terms of asset allocation, we've got about 25% that we can put in listed equities. 25% of our AUM. Our asset under management as a pension industry now is about 22 billion US dollars. 25% will give us, let's say, about 5 billion US dollars. The important thing is that we have not fully deployed that 25%. Where we are now is about 16. And it speaks about, being able to get more products in. We are hoping we'll get more of those products in. The size of the Nigerian Stock Exchange now is about 78, let's say 75 billion US dollars. And what we are trying to do is that the more we get more products, listed on the exchange, the more we will be able to deploy, what we've got. We are also exploring, and it's very important, for global institutional investors. We are exploring what we call the non-traditional assets. And because we are trying to match our own asset with our liabilities. So when it comes to real estate, some of the opportunities I've told you. When it comes to REIT, real estate investment trust, when it comes to infrastructure fund, when it comes to private equity fund, when it comes to infrastructure bonds, those are the assets that we are also trying to explore, because they on one side, they will fit into the kind of liabilities that we've got. As I've told you, if you look at the current contributors to our scheme, about 65% of them are below the age of 40. Right, you become pensionable in Nigeria at the age of 50. And most people will still work until they are 60, 65. So if you have about let's say, 65% of the contributors below the age of 40, it means that the liabilities will crystallize 15, 20 years from now. So what we're trying to do is to make sure we match our asset with our liabilities. So that's number one. That's why we want to play in some of those long, term, kind of asset classes. The other reason is that because, we are still developing, right? And we have many deficits when it comes to infrastructure, right, in Nigeria. We believe that if we play in infrastructure space, right, whether it's power, whether it's transport, if we play in those areas, it's also to our own benefit. Why? Because as we speak now in Nigeria, we're talking about unemployment rate that is above 25% out of a working population of about 70 million. The more people we are able to put on employment, right, we will see more contributors to our pension scheme. Then we will get more assets. So it's also in our own interest. That is why we look at some of those asset classes. On one side, we match our asset with our liabilities. On the other side, we are able to invest in areas that will generate employment so that we can get more contributors and we can get more assets under management. And because at the end of the day, our fees are linked to AUM. So that's why every time we meet, let's say with the likes of those who can put some of these products in the market, whether we are talking about Macquarie, what Macquarie is trying to do in infrastructure space, we say, look, you guys, we cannot wait. Actis, you guys, we cannot wait. We need to move. And it's important for us to be able to do that as soon as possible. Luckily for us, about 2 infrastructure funds were approved by SEC, about a month ago. And we are hoping that before the end of this year, right, commitment will have been given so that we can be able to tap into what is happening in the power sector now. It's being privatized, right? And in the energy sector, it's being privatized. So we can invest in that. And that will be the beginning of the journey into investment in infrastructure. I would like to stop at this point.
Thank you so much, Demola.
Doing business in Africa. You can't afford to be without Africa Investor.